founders circle back and extend immense gratitude to our incubator because definitely, not just there, we have been told that yes, that is a place where we get our wings from. With that, I, on behalf of Artful Incubation Center, Prestige Inspire Foundation, welcome you all to Central India's biggest startup summit, Prarambh, in association with Madhya Pradesh Startup Center and AIC-PRESTIGE. A one-day event curated with pitching sessions, exhibition, panel discussions, and workshops. Key takeaways for everyone. I would now like to invite Dr. Sanjeev Patni, CEO of Artful Incubation Center, Prestige Inspire Foundation, to commence the event and extend his welcome.
Thanks, Anya. I think there is kind of small change in the schedule. Are we going to have Dr. Chintan Vaishnav come on the screen first? Because he said 11:50. Can you check? And also there has been a kind of slight change in the dignitaries that we were going to have, including Narahari not being available. But nevertheless, I'm pleased to welcome all. Dr. Chintan Vaishnav, who is joining us remotely. Shri Abhishek Tipadia, Head of MP Startup Center, Government of Madhya Pradesh. Sri S.P. Singh, he is also joined remotely. And Dr. Davish Jain, Chairman of the Prestige Group. Investors, very pleased to see you around here. And my co-partners from the ecosystem. At the behest of AIC-Prestige, I welcome you all, and I'm indeed so pleased to see you all on this conclave, Prarambh 2022. Today we have some very knowledgeable speakers who will enlighten us to the unique viewpoint and vision for the startups. We also have knowledge sessions, as Anya said, and pitching sessions for investors, workshops, and a workshop for the incubators. Dr. Chintan, are you there? Dr. Chintan Vaishnav? Just for the purpose of introduction, those who may not really know him, he is the mission director of Atal Innovation Mission, Niti Aayog, Government of India. Has been the kind of pivot of taking it across to the world headquarters. Dr. Chintan Vaishnav, we are so proud to have you with us. And for your information, he has been just recently appointed as the chairperson of the Startup 20 at the G20 Summit that just recently concluded at Bali, Indonesia. Under his vision and leadership, the belief of the government in the startups, India already is ready to claim its right position on the world level. Dr. Chintan, you're on mute. Are you there? He has been one of the wizards in terms of bringing a lot of innovation and has been carrying forward the responsibility of taking forward a lot of innovation and disruption level initiatives for the government and now for the G20 countries as well. Give me a moment, please.
All right.
And those knowing him, okay, so we are all waiting for you. You there? Okay. Yeah. Well, we can't hear you. We can't hear you as yet. You got to unmute yourself. Right.
Yeah, hello. Can you hear me now?
Yeah, loud and clear. Go on, I mean, all yours.
Hello.
Chintan, so So pleased to have you with us. I know you have a strict pull from the Parliament to be present around there today, and so unfortunately you could not make it. But I have your promise still valid that you will soon make it to come to Indore. Today we have an August gathering of investors and the startups. We are also keen to really see you soon, but hear you now and hear your words of wisdom. All over to you.
Hello. Can you hear me?
Yes.
I can't hear you all, but you can hear me.
Yeah.
Um, yeah, hi, Sanjeev.
We can hear you all. We can hear you, and you can go on, please.
Oh, I see. Okay, all right, great. Yeah, hi, everyone. Very good morning to you all. I can see the people who are right in front of the computer. You can move out. Okay, I can now see Sanjeev. um, it's shall I go on?
Yes, please. Yes, please.
Okay, great. I can hear you also. Okay, well, greetings to everybody. A very good morning. One more time, that my Indore visit remains pending. Unfortunately, we really tried our hardest.
have our founder, Dr. Nirnath Jain. Educational endeavors ranging from soybean processing, wheat milling, animal feed products, food products, and of course international business or international trading. In education, the flagship institution, Prestige Institute of Management and Research, as also the Prestige Institute of Engineering Management and Research, have played a pioneering role in building the edifice of high professional and business-oriented professional management and engineering education with our other institutions based out of Devas and Gwalior, and now a world-class Prestige University going on stream this year right in Indore. Although from Tier 2 city, we have a deep belief in the capabilities and caliber of the youth who have further to contribute to transform India into a global superpower. The new wave of startups have provided a massive equalizer opportunity to Tier 2 towns. We are keen to play the role of an enabler and accelerate the growth of the country by provoking and providing relevant education, entrepreneurship, internships with our incubation center, which is set up under the aegis of Atal Innovation Mission of Government of India. Startup ecosystem in Madhya Pradesh has now evolved and emerged as an unprecedented way in the last couple of years. In 2016 to 2022, the state currently reports registered startups of 1,900, out of which as much as 800 are run by women entrepreneurs. In Bhopal, Jabalpur, Gwalior, Indore, Sagar and Satna. The state also has a set of ecosystem enablers as ECHI, Indore, Startup Ignition and Indore Entrepreneur Network, among others. Indore itself is proud to have almost 40% of the state's startups which emanates from the city. tremendous efforts and great collaboration put in by the state government departments, public and private academia, local industries, including efforts of a dedicated state government nodal department for the startups. The startup ecosystem in the state has got a further boost with the launching of Madhya Pradesh new startup policy by the Honorable Prime Minister Modi ji on May 13, 2022. With all these policies in place, I am sure that Madhya Pradesh, with abundance of young talents, world-class developing infrastructure and strategic centralized location, will ride the startups wave and will find its place among the hottest startup destinations in the country in the next few years. Our incubation center has been relentlessly working towards making startup ecosystem in Central India more mature and get its due recognition. To again express our gratitude towards Dr. Chintan Vaishnav, under able guidance and support of whom our incubation center has matured and become the largest in Central India. Raising a startup is a brave task and needs support of various entities, which includes the family, the society, the institutes and the government. To a formidable option, they need to see the potential and possibilities with kind of build-up of traction and with due support of the government. I would like to assure the august gathering here that Indore will soon emerge as one of the front-ranking hub of the country in startup ecosystem. There is very sincere and extensive effort to enable the youth to excel through our education and incubation initiatives. But as we know, the larger cities have much mature startups, and so they migrate from tier 2 to larger towns like Bangalore or Gurgaon or Pune. We are constantly working to bring around a strong wind of change and inspire them for raising their startups right from here in India. The cascading change is already inflicted. The startups of towns like Indore and Bhopal are no longer treated to be in the backwaters. There are many startups from here which are mature and have got funding as well. Although there is no doubt in the potential, there is still a wide gap in the maturity level of startups between tier 1 and the rest of the country. This can be bridged by taking pragmatic steps and bold decisions. The central and state governments, which are doing indeed a very commendable job, are intensifying the drive for capacity building programs, orientation programs, and startup support centers or the incubation centers. Various schemes are being floated by the government, which are required to be facilitated by these centers by deep reach-out programs. The region need to identify specific sectors and fuel them with growth engine of expertise like in the IT sector, SaaS, drone tech, Industry 4.0, IoT, deep tech, data security, dev tech, visual tech, and so on. Centers of excellence of these emerging technologies need to be built with support of industry and the government for facilitating experiments, testing, trying, and adopting new technologies and trainings, etc. I'm sure government is active on showcasing of the startups and enable them to interline and collaborate intensively. The founders can do the bootstrap funding only to an extent. While VCs and HNIs are keen on funding the startups, it is indeed very commendable that SIDBI and other VCs and angel investors are keen on investing in startups from tier 2 cities like Indore and organize such funding support drive. Our incubation center is hyperactive in the startup ecosystem with a vision of developing the region with best startups that are able to scale up to the national and international levels. The ecosystem support at Indore would be soon just as good as the tier 1 cities. I once again welcome all to Prarambh 2022 and wish it a grand success. Thank you. Jai Hind.
Thank you, Dr. Davishan, for your words of wisdom. I think it's a combination of the policy issues, the interlining of private with the government, and trying to make sure that the contribution that we can do towards the ecosystem is being announced also here. Can I also invite Abhishek Bardia to take his place on the stage, please? Yes. And Shri Gautam ji.
Davis sir, we believe that your participation in the ecosystem, not just of the startup but also education, is extremely prominent. I invite Dr. Sujeet Bani to extend a floral welcome to our guest of honors today, starting with Mr. Davis Jain. Dr. Davis Jain, Chairman, Prestige Education Foundation. So please also extend our floral welcome to Mr. Abhishek Badia, Executive Head of MP Startup Center, Government of Madhya Pradesh. Also to Mr. Gautam Kumar, representing SIDBI. Dear guests, we're extremely elated that you have been a part of this particular event. We thank you for your presence.
Let me take the pleasure of inviting Abhishek Bardia to speak to us with his words and vision. And before that, I'm pleased to read out the introduction of Abhishek Bardia, and you will soon know under his deep experience what lies beneath him. Abhishek Bardia is Executive Head of MP Startup Center, Government of Madhya Pradesh since June 2022. Prior to his current role, Abhishek has been with Ecosystem Venture Partners Indore, an Indore-based investment consulting firm focused on providing 360-degree ecosystem to startups and become successful businesses. He is the co-founder of Trishka Industries Private Limited in engineering industry in hot metal forging, machining and fabrication, which is based out of Pithampur. Prior to becoming an entrepreneur in 2014, he had spent almost 9 years with some of the most prestigious companies in India, in both in corporate and banking. He started his career with Aditya Birla Group as a part of the strategic team for the financial services, life insurance, mutual funds, NBFCs, etc. He had the opportunity to work closely with the top management team at Aditya Birla Group. He was then a part of the treasury team at IIT-Cellular, where he was responsible for raising long-term and short-term funds from banks and financial institutions from across the globe. During his stint at IDEA, he raised more than 20,000 crores of loans in various structured and currencies. He also played a vital role in the IPO and 3G spectrum auction bid of IDEA-Cellular, and he worked as executive assistant to the chairman of Hexaware Private Limited for a year and a half. During this period, he played a key role in steering the company through the most difficult phase when it was embroiled in rupees 1,000 crore forex scam. In his last corporate stint, he was the senior vice president, project finance at IDFC Limited, and he was responsible for managing corporate relationships with companies in Tata Group, Aditya Birla Group, Vodafone India, Reliance AGA Group, L&T, Rahita Group, and completed the debt and equity transactions for more than 30,000 crores during his 4-year stay at IDFC. Friends, I present to you Shri Abhishek Tiwari.
Thank you, Dr. Patni. Dr. Davis Jain, Gautam ji, Patni ji, all the VC investors, VC fund investors, present with us today, and other dignitaries and my dear friends. Very good morning to all of you. Actually, I was not scheduled to speak today in this session. It was supposed to be our Minister Saklecha ji and Hari ji who were supposed to. But I think I'm filling in for them, and I'll try and cover the topics or the points which they would have otherwise wanted to convey to you. Okay, so first of all, let's try and understand the importance of today's event. I think it is one of those rare opportunities, if not the first, where the three major initiatives of the Government of India for promoting the startup ecosystem in this country are all coming together. This event was conceptualized in the cabins of Shri Anurag Jain, Secretary DBIIT, which is the policy-making arm for startups in this country. We have SIDBI as the main sponsor here, which is managing the fund of funds for Government of India of 10,000 crores. They're probably one of the biggest check writers to the VC, early stage VC community in this country. And we have Atal Innovation Mission, Dr. Chintan Vaishnav himself, the mission director, joining us today in a virtual presence. So, the essence of today's session is that the Government of India has realized the potential that the startups in the central India, in tier 2 and tier 3 towns hold, and they want to promote those startups in front of the VC investors who are sitting here. Of course, the state government is playing its own role, but I think we all need to understand the gravity of why this thing came together. Now, having said that, what is the state government doing in order to promote these startups in central India? I'll just spend next 5-7 minutes on that. So, MP government had two policies before, so we had a policy in 2016 around startups, we had another policy in 2019 around startups. Unfortunately, not much happened because of those policies. The reason was not so much intent. The reason was that the people who were executing those policies, they were government, senior authorities, and they had got so many things on their plate that startups ke liye kuch karna hai never even came on their priority list. So this time in 2022 February, when the new policy was adopted, they said we don't want to have this burden of implementing this policy on our hands. We want professionals to come in, form a new agency called MP Startup Center, let people come in and execute this policy and make sure that whatever is necessary for uplifting the entire startup ecosystem of MP is done. Now, the burden of, or rather the privilege of being the first executive head of this agency came onto my shoulders. So on 1st June 2022, when I joined this agency, I was the first employee, of course. Over the next 3 months, we had our team come together. It's been almost just a little over 6 months now since I've joined. So the last 3 months, we have been able to, work a little more diligently and efficiently on the agenda that we have been, constituted with. We tried to figure out what are the things that are basically the biggest problem areas for the entire startup ecosystem, not necessarily for MP only, but overall. The first or foremost thing which came into our mind was that it's very fashionable to say India mein 90% startups fail hote hain in the first 3 years. Correct me if I'm wrong. So all the VC funds sitting here, 90% startups fail in the first 3 years is what I've heard. If not 90, 70 only, whatever that number is. Nobody has done an accurate scientific study around it. But I think what we don't realize is that out of those 70, 80, 90% startups, there are people behind them. They have spent money, time, energy in creating, working on those ideas, and they have failed. Look at the hard work which goes behind that. So the first and foremost thing which we tried to work on was, or rather we are working on is, how do we reduce this failure rate for startups? I think what helps you reduce the failure rate for anything is if the people who are taking it up are more diligent and aware about what goes into making it a success. अगर लोगों को पता होगा कि startup found करना तो आसान है, but उसमें लगता क्या है in order to make it successful. Once they understand that, then the chances of their success are much higher. So, we are conducting boot camps now across the higher education institutions of this state. This year, between now and March 31st, our target is that we should do at least 25 boot camps, 2-day boot camps, detailed, making the students understand what exactly it takes to be a startup entrepreneur. If you have it in you, please go ahead and pursue this path. If you don't, please don't waste your time on it. But at least be fully prepared before you get onto this path. So making people aware of what it takes to become a successful startup entrepreneur is our first and foremost priority. We have already identified 6 startup incubator centers who will be partnering with us in this. And I think my colleague Prarambh is sitting here. It's his responsibility. The delay is on his part, not mine. That we haven't been able to fully roll this out as of now. But I think the next week, 10 days, we should be starting this off. And before March 31st, we will be conducting at least 25 boot camps and maybe many more in the years to come once we see the success of these 25. And government is paying the incubation centers to do this. We are spending money to make sure that our startup potential entrepreneurs are fully aware of what it takes. Right? Then of course the incubation support, because once I've got the incubation idea, startup idea, तो क्या करोगे? Incubation center में जाते हैं सबसे पहले सब लोग. We have got 45 plus incubation centers running in this state as of today. People will not believe, but a significant majority of them are either funded by the government of India, government of MP, or the PSUs. Almost 70% of these are funded by them. Now, again, not all incubation centers are running equally efficiently. Some are doing very well. So, the AICs which are sitting here, they are doing very well. There are some which are barely existing on paper. What we are trying to do is to enable these incubation centers to come up the ladder and be able to deliver the kind of service which a startup deserves. So in the second today, we have a session on teaching the incubation center or training the incubation centers on how to basically help startups who walk into their doors. So that's the second agenda which we identified. Third is आप incubation center में चले गए, आपने product भी बना लिया. I think it's MVP, what we call minimum viable product, right? You have created an MVP. Now what next? You need some customer to figure out, or you need customers who want that product. How do you give that opportunity to the startups? Like I think people before me said, people of tier 2, tier 3 cities are a little shy. They're not as outgoing or approachable, or as aggressive in approaching their customers as the tier 1 Bangalore, Gurgaon, entrepreneurs are. So what we are doing is we are providing marketing opportunities to our startups. Like I said, we are still a young organization. So in the last 3 months, we have given opportunities to 20 startups
in Bangalore and Delhi in various events where they have gone and showcased their products. I'm told that in the last event, one of our startups, he's prepared some, food ingredient product. He had opportunity to sell those products in that, in that exhibition. It's called IITF, India International Trade Fair, which was held in Delhi. The amount of sales he was expecting in that event, he sold 5 times of that. 5 गुना सेल करी जो उसने एक्सपेक्ट करी थी उससे. He was not understanding the potential of his own product, but when we gave him the opportunity, he was able to do wonders. 20 को हम opportunity दे चुके हैं. We have got Pravasi Bharatiya Divas and Global Investors Summit, two of the most esteemed
programs of Government of India and Government of MP being held in Indore right across the street from 8th to 12th of January, in the coming January. We are providing 61 startups opportunity to showcase their products in those events. 61 on virtual basis and probably around 20 of them on a physical basis. All free of cost. They don't have to pay a single penny for doing that. We are incurring that cost. Of course, अब आपने प्रोडक्ट भी बना लिया, मार्केट में भी ले गए. Next you need is funds. So we have got, I think 8 or 9 VC funds sitting here today, right, Sanjeev? More. Yeah. So we have got 8 or 9 serious professional VC funds sitting here today. On top of that, just to share with you, Government of MP had floated an RFP in April this year to invest some money in the VC funds. 5 VC funds had shown interest in that. We are in the final stages of signing documents with 2 of them. बाकी 3 के भी डॉक्यूमेंट we don't have those kind of deep pockets, but what it does is it makes those VC funds committed to fund the startups of MP. जब सगाई होती है ना तो रुपया नारियल पकड़ा देते हैं ना, अब जो भी यहाँ पे लोकल है वो समझ जाएंगे. रुपया नारियल पकड़ा देते हैं तो लड़की हमारी हो गई या लड़का हमारा हो गया. So basically funds हमारे हो गए. We are giving them that much money. So their commitment to come back to MP, look at the startups of MP and invest multiple times the money that we are investing with them in the startups of MP. That is affirmed. Now what we have done is, आपको idea आया, आप स्टार्टअप कैसे स्टार्ट कर सकते हैं, हाउ डू यू बिकम सक्सेसफुल, दोस फंडास आर गिवन टू यू व्हाइल यू आर स्टिल वर्किंग ऑन दोस आइडियाज. द इंक्यूबेशन सपोर्ट इज देयर. वी आर ट्राइंग टू स्ट्रेंथन द इंक्यूबेशन सपोर्ट, मार्केटिंग अपॉर्चुनिटीज, फंडिंग अपॉर्चुनिटीज, और उसके अंदर काम आपको करना है. Right. So government, of course, there are financial incentives and all which are there, which our policy has. You apply for them, we'll give you them. So we have another session in the second half where we'll give you details about what kind of financial incentives, grants, etc., which the state government is providing. But I think that's not for this session. Let's focus on that in the second half. There's one more thing which we are doing, which I would like to highlight, and not many of you are taking advantage of that. MP गवर्नमेंट बहुत कुछ कर रही है, बहुत सारी अपॉर्चुनिटीज दे रही है, but there are other agencies, national and international, who are providing you opportunities which can create, opportunities for you to, take your startups to another level altogether. Funding की होती है, marketing की होती है, कई अलग तरह की होती है. Now, it's not necessary that all of you are aware of those opportunities on a day-to-day basis. So we have a dedicated team in our setup who finds out कहाँ पे क्या हो रहा है, वो opportunity हमारे startups के लिए important है क्या. Even if we are not a partner of those events, opportunities, whatever, we send out the information about those opportunities to you guys. We have 2,500 plus startups. Sir, 1960 6 महीने पुराना नंबर है. We have 2,500 plus startups as of now. We have 45 plus incubation centers as of now. अब उन सबको almost on a weekly basis we are making you aware of what all is available out there which you can utilize for your benefit. Please make the best use of those opportunities and make yourself a success. That's all that we want. Once again, thank you so much for giving me time. I hope I have been able to convey the message which the other dignitaries would have wanted to, and all the best in the grand success of this event. Thank you so much.
Thank you, Abhishek ji. Very insightful about what kind of activities are being carried out. Can I also request Gautam ji, I know you want to really read out a message for Sidbi. Please.
Dear dignitaries and my dear friends from Indore, I welcome you all in this program, and on behalf of our management and on behalf of our Chief General Manager Mr. S.P. Singh, I would like to read out a message. We are living in an era when the entrepreneurship movement, or as we call it in Sidbi, Swavalamban movement, is taking new dimensions. The startup ecosystem in India has been thriving, fostering innovation, entrepreneurship, and being in the forefront of technological changes that enabled India to steer ahead. Backed with the success of startups, a lot of venture capital funds have been changing the landscape of the ecosystem in country. Impact-focused funds are aiming to make positive changes in non-monetary changes in sectors like environment or technology. Under the Atal Innovation Mission, the government has set up Atal Incubation Center to help incubate startups in various sectors. As a result, institutions like AIC-PRESTIGE are creating, promoting a culture of innovation and entrepreneurship across the country. The government of India has also established a fund for startups with a corpus of rupees 10,000 crore to meet the funding needs of the startups. The Department of Promotion of Industry and Internal Trade under the Ministry of Commerce and Industry is the monitoring agency, and SIDBI is operating agency for FFS. The program has not only made capital available for startups at early stage and growth stage, but also has played a catalytic role in terms of facilitating raising of domestic capital, reducing dependence on foreign capital, and encouraging homegrown and new venture capital funds. So, although we hear a lot of stories that getting funded is hard for an entrepreneur, the reality is that there has to exist an investor-investee fit. In order to make this a fit in the heartland of India, in the smaller cities, SIDBI on behalf of DPIIT and Government of India has initiated this program called Prarambh. This is a series of stakeholder meets in an attempt to bring startups and VC funds together. So we have done one such program in Rajkot. We have done one such program today in Indore, and we are planning to have some more programs in similar cities. We are grateful to MP Startup Center, especially Abhishek ji, and AIC-PRESTIGE Incubation Center, Sanjeev ji, to partner with us in this attempt. I am thankful for all our venture capital partner funds. Let me introduce them also at this stage. We have privilege to have Mr. Jinesh Shah. He is from Omnivore Capital. We have Mr. Jay Seelan and Mr. Arun, who is from Bloom Venture, Grand Anikat Capital. Then we have Shri Dipanshu Siddhanti. He is from Beams in Fintech Capital. And we have Shri Rajesh Saigal ji, who is from Shri Rajesh Saigal ji is from Equanimity. Sorry, I am sorry actually. Yeah. And then, so some of these funds you will get, and we are trying to bring these funds here. And the idea is that you get assimilated with the knowledge with everyone. It's never a bad idea to seek wisdom from bright and successful minds, we are experienced it all before. With these words, we welcome you all of you united mind in this program, and invite you to have free and frank discussion for the mutual benefit of the house. Thank you.
With that, let's come to the kind of substance. And the substance is the kind of round that we have been waiting for, or rather keenly waiting for, which is about releasing the first check. Can I request Javishji to take his place in the audience? With that, I'd like to start inviting each one.
वन नंबर पे यही वाला है।
डिस्प्ले खुलेगा क्या? हाँ टू वाला अभी तो बोल रहा हूँ क्या लगा टू। हाँ ये लगाना है।
India is home to 80,000 startups working in different modalities, functionalities, and sectors. A phenomena that is expected to give rise to a new India. Every idea has the capability of giving birth to a solution that can impart a life. Developing startup ecosystem in Tier 2 and 3 cities of India. Let's give it up. Then we have our third guest, Mr. Rajesh Segale. Sir is a managing partner at Equanimity Investments. It's a Wharton and Excel. Sir is a Wharton and Excel RI alumnus and has an experience spanning 25 years across public markets, private equity, venture capital, and angel investing. It's an honor to have you, sir. Please give it up for the guest. Then we have our fourth guest, Mr. Dipesh Agrawal, partner, Silver Needle Ventures. Sir is the co-founder and partner of Silver Needle Ventures, which is an India-focused venture capital firm investing in early-stage technology-led businesses. It's a 100 crores SEBI registered firm. He was also the co-founder of XC Partners. Please give it up for our guest. We have our fifth guest for the day, Mr. Alok Mehta, sir. Sir is the CFO and lead investor relations at Bloom Ventures. He is responsible for finance, compliance, operations, and investor relations functions. Sir is also an experienced corporate finance professional and has been associated with ICICI Bank, Brand Capital, and Lola Capital Markets in his previous years. Please give it up for our guest. Then we have Mr. Jayceline A, partner, Anicut Capital. Sir heads underwriting and monitoring for the fund since inception, where he is responsible for constructing and managing the portfolio to suit funds investment, objectives, and investing company aspirations. Please give it up for our guest. We then have Mr. Arun Patatki. So please correct me if I don't pronounce your surname right. Sir has 15+ experience across investment banking, management consulting, and corporate development. Prior to Anicut, Sir was head of corporate development at Sulekha. Before that, he spent 7 years in investment banking in India and London with global firms including DC Advisory, Arma Partners, and Bank of America Merrill Lynch. Please give it up for all of our panelists. Then we have, at last and not least, CA Anand Saklecha, Sir, partner, Ivy League Ventures. Anand Saklecha Sir is a fellow member of ICAI and CMA. In his profession, he is partner Anand Saklecha & Co, Chartered Accountants, Director ASCO Capital Private Limited, and partner Ivy League Ventures. Please give it up for all of our panelists today. Sanjeev Sir, then we have our very own moderator for today. Then we have our very own moderator for the day, Mr. Shailesh Chen, Vice President at Ecosystem Ventures. He has a mentoring portfolio of edtech startups, fintech startups, and we help them build a scalable business with deep impact. Sir, it's a pleasure to have you. Over to you.
Thank you, Sania. That's a galaxy of very knowledgeable speakers around, and we are going to see some kind of deliberation on several kind of questions that you might have in mind, and several kind of anxieties. The first and the primary point is how to raise the first check, which is by far the kind of most difficult time. It's an art or a science, I don't know. But very curious to hear from all the kind of wizards here, how do they treat somebody who comes for a first check, and what do they look for in it, and how do they really measure somebody? Again, I can't really measure whether that's an art or science, but definitely there is something, and we are very keen and curious to know. Not just for our knowledge, but as a piece of information to a lot of startups and who will preserve those ideas and thoughts and tips, those come out from you, and make sure that either they do it the right way, one thing, and secondly, don't commit the kind of mistakes that repel you, or that repel them from you or you from them. Shailesh, over to you for taking the panel across. It's going to be a hot session. I'm sure we'll have a lot of beautiful points, beautiful tips coming out. Thank you so much.
Thank you so much, Sanjeev. First of all, I would like to thank the entire Prestige group that they have organized this particular event at our incubation center. And I welcome all the guests sitting over here. I think this is going to be a great brainstorming session for all the audience, and they would like to get a lot of their queries answered by all of you. although I'm meeting all of you for the first time, so I don't know much about you. I have just heard about your introduction, what was given there from the dais itself. However, as per your expertise, as per your experience, I believe that you are going to contribute a lot of ideas, a lot of information, so that we can enhance the knowledge base of all the audience sitting over here. So let me begin. So I think, as the topic says, raising your first check. So raising your first check has got two interpretations. One, from the investor side, that how do they raise the first check for a startup or for an SME or MSME. And similarly for the other side of the table, that is the startups, those people who are looking for their first check. So it is a different perspective for them, that raising their first check, right? Fundraising for them. So let us start with Rajesh ji. I would like to request him to initiate the conversation. Like, first of all, the major question that is there in the minds of people is that what is that X factor that you are generally looking forward to? However, this question is not only concentrated to Rajesh ji. Other people can also contribute once they have got ideas to add on. So what is that X factor that you generally look in a startup, in a team who is looking for their first check? They are having an idea, some kind of creativity with them, and they have done some kind of work till now. They represent that, and finally they are looking for, they are aspiring for their first check so that they can really scale up their business. So what is that X factor? Although people have got their own answers to that, but then I think we are going to get some new perspectives from Rajesh ji as well.
Sorry to disappoint you, there's no new perspective that's going to flow. So for most startups, I think all of us here, have very little to go by. By definition, these are startups, these are very early stage businesses. They don't have a lot of history, they don't have a lot of financials that we typically, on the investing side, look for before we decide to fund a business, whether it is listed, large cap, small cap, mid cap, unlisted, SME, MSME, or a startup. And just to give you a little backdrop, so in my introduction, they mentioned that I started my career in the listed markets, and then I did private equity, and now I'm doing venture capital. So, I can tell you that even in larger listed companies, the way we evaluate them, what we look for, is largely, there's some science to it. And I think Sanjeev sir started off by saying there's a distinction between science and arts. Kitna art hai, kitna science hai. So I think there's some science there. But as you come down that growth path, when you look at early stage companies, SMEs, very small companies, this is largely art. There is, as I said, it's the same answer, but there's very limited science. So it's more art, it's more spending time with people, understanding the team, what they bring to the table. These are very intangible things rather than quantifiable. They're very qualitative factors. It gets me back to days when I was doing my MBA at XLRI, and we Indians are all PCM people, physics, chemistry, maths, hardcore numbers. We all known globally for that. So I was on the business management side of. So there were two batches at XLRI. There's still only two batches, by the way. I was on the business management side, and I'm sharing it with you in confidence. And we used to look a little down upon the other batch, which was. The human relations, HR part. I must admit that, as I got more and more experience in corporate India, I started realizing that there's so much more to understanding people, spending time with them, understanding human resources, harnessing them, than it is to numbers and Excel sheets and valuation models. So I think as Sandeep sir said, it's more art in the early stage than science. So we look for people, chemistry, spend time with them, understand them, and then take a leap of faith. It's like the entrepreneurs, right? They are also passionate about something and they're taking a leap of faith. Most entrepreneurs are quitting some jobs, some very secure jobs, and taking that risk and taking that leap of faith. And I think we people on this side are also doing something like that from a different perspective.
Definitely. So, gut feeling and leap of faith is the main thing that finally you look forward to. However, we believe that some of the quantitative things also play a major role while deciding. So, it can be said as a combination of art and science. Although, when we talk about the second check, when we talk about the third check, Series A and many more, Obviously, that is more science because that is fact-based, that is data-based, that has got something which has already happened, some experiential data. So definitely, second and third check are more science. But then first check, obviously, we cannot say that it's purely science because there are certain things that he said, leap of faith is there, some kind of chemistry is there in the team. But when we talk about quantitative things, definitely there are a few things like whether we want to say that founders, do they have that kind of skin in the game or not? Whether they are really involved or not. Is it their side business, is it their secondary business, or is it something that they are completely involved in? So that is one of the factors that generally people think of. Anandji, I would like to listen from you if possible, that in Indore, there are many people who think that we are already running certain businesses, we have got certain level of success which has already been proven. Now there is next generation coming in, so let us have something more. And since the trend, the fashion of startup is going on, so people say like that these days. So they think that let us have one more business in the form of a startup and let the generation take it up. However, the involvement of the senior members in the family is too much and they consider that startup is another business. So is it really true? Or is it really possible that somebody who takes a startup as a third or a fourth business of their family and consider it a startup? As per the definition, the startup, I think it is something different.
I agree with you. We cut the first check. So we cut a check not exceeding a crore rupee, and we are cutting a check at ideation stage, and when the product are under at a prototype stage or something like that. So the first thing what you said is, which we look very seriously into is how much skin is there in the game, how much he is engaged with that particular idea and how much time. And basically ऐसा होता है कि जब मैं ये मानता हूँ मतलब कि if you have to put everything on stake if you are starting, if you are asking for the first check to come from an investor who don't know you. So unless you have put everything on stake, तब तक check देना is a little difficult for anyone. Ideas are immense, like as Sir also said. It's more an art. Like what we see more is like how much the idea is commercially scalable, whether it can go to the market well, what stage it is. But yes, as you said rightly, and we also feel that there has to be enough skin in the game so as to take this to the first round.
I would like to keep it open for other people to add on, because I believe that everybody has a different way of evaluating, assessing the startups. Some think of market size, some think of the product, some think of the team which is there behind it. So if you could add up more things so that people out here can understand what kind of evaluation parameters they have to go through in case they are going to look for a first check.
I will just add to what Sakleja said. There is a huge opportunity cost associated with whoever is starting up. Because all the founders are qualified, they are well educated, and they have obviously an opportunity to earn a good salary, have a good corporate career, if not anything else, right? That is enough skin in the game if they are fully vested into the startup and are married to that idea and are willing to slog it out for next n number of years. That is something that we should not never forget. We should be starting up for the right reasons. Not just simply for the sake of starting up, because there is a lot of sacrifice and commitment which is involved.
I think we are expecting some more ideas from you. Please. Yeah, you are.
I mean, at Silver Eagle, before this, we started something called Exceed Partners, and that was a seed stage fund which would pretty much start right in the beginning. And we have moved on from that to the next stage, and we have seen 29 startups which have performed really well for us. And I wouldn't speak from their experience because we are more entrepreneur first experience. Like we don't be the front end all the way. We let the entrepreneurs and we support them in the back. So I would say, when you're looking at first check, the most important thing you need to understand is what you're getting into as a business. Right? How you operate it as a startup is a model, right? In terms of the startup ecosystem, how it works, it has its own rules in terms of how it works. But primarily, what area you have got into, you got into a certain area, is that something well researched? Right? I think the core point is there are multiple ways people get to the idea. So let me take an example, right? The
one of the entrepreneurs who's quite successful in one of the real estate portals, right? His way of identifying the idea is very unique. He's an IITian, and what he does is, we all believe, in a dream world, it is like, we figure out an idea and the night we have a eureka moment and tomorrow we go and get the funding. But it's not like that, right? I mean, it's fundamentally a process. And the process starts from the point when you start thinking, what is the business I'm getting into? And fundamentally, startups, the first thing you should always understand, startups when they start and when they mature are totally different companies and their models are different. The starting point is only the starting point, and everyone should be open to the idea of moving away from the core idea and developing what the market wants, right? So now the idea here is a person can do it two ways, right? A person who has a lot of passion in terms of saying, this is what I want to do, this is my area of work, and I will pursue this. Right? And then what happens there is, the person is too tied up in terms of saying that this is my level of comfort zone, this is the area I'll work in, and you're going bounded by it. The other way of looking at it is, you're saying write the first check. So let's find out who's writing the first check for what, I think, and then look at the startup in that area. That's the other approach which has worked really wonders, because we are now invested in about 3 second-time entrepreneurs. Right? And the way they go about in terms of a process is different. They would evaluate like these are the 6 top areas which we would want to work with. And then they'll go reverse, right, in terms of saying what is happening at the larger ecosystem, say a Series A, Series B, Series C, and then roll it back and say which has the biggest market area that we can address. So I mean, the most important thing for any startups is the TAM, they call it, right? Total addressable market. And that need not be always true for each startup, but I think that's a key starting point, because if you're targeting an area which probably has a limited scope of growth, say about you can expand to 5 cities or 10 cities, tier 1 cities, then you're limiting yourself in terms of what you would do. But if you have an idea which is more sustainable and you know what is happening in other geographies, I think that would have a very massive impact. I think healthcare is a very beautiful example. I think I was talking to Sir and said that, we are talking to 2 startups in Madhya Pradesh, and both fortunately are from healthcare. And they have a clear vision, right? They don't have a vision saying, I'm going to set out of Indore. They have a clear vision that 4 years I'm going to be all over India. Right? So I think that's the idea that someone needs to address. And I think the first article when we were in Exceed, the article we were written was, what's the difference between a startup and a business? And I think both are equally good and important. But you need to start with a business and then figure out whether it's a startup and then operate on the metrics of a startup. I think as simple as that. And I think the other point, I think we have spoken earlier to your team, Silver Needle. I think your entire team has had a call, so we met earlier. The other thing is, I think you mentioned the big business families. Right? Now the young kids do not want to carry the legacy of their business family. And in fact, one of the companies we invested in, Nourish, we came to know later that the person comes from a big business house who probably is like 20 times the size of the funding itself. So I mean, I think that whole notion of the younger India is moving. They want to do everything on their own. And I think Bajaj Group is one of the best examples. Right? In that, the rule is simple. Every young kid has to start a new business. No 2 kids has to be in the same business. Everyone has to start. And I think that's the business family culture. So you can always be a business guy talking English and an English guy talking business. And we would always prefer the first one. And I think that's what I was saying. When it comes to states like Madhya Pradesh and core industry areas, I think one thing is for sure, they know how to build sustainable businesses. And once they understand the game of a startup, right, in terms of how the whole valuation game and how the scalability happens, I think it's just a matter of 2-3 years. You'll pick up and probably produce more unicorns from this place than other places.
Definitely, that is one of the wonderful examples of Bajaj family, that they're giving everybody an opportunity that you have to start from scratch. So that is how you learn all the things. One fine day I was reading about Azim Premji, and he said some day that in some interview Azim Premji was asked that how could you become such a successful person when he became the richest man of India somewhere in the 90s. So he was getting interviewed and he was asked, said, what is the reason behind your success? And he took a pause and then said very bluntly, he said that I believe that anybody who has to become successful at such fast pace, his father has to die early. So shocking statement that he gave at that point of time. But then that was true, because he was just an age of around 20 or 21 when his father Muhammad Hashim Premji died. and he had to come all the way back to India. He was pursuing graduation from some other country, and then finally he had to leave his graduation in between and come back to India to take over the business. And finally, after many years, he started so many things and finally became successful and became the richest man of India one day. And now he has got no legacy from his father because he was studying at that point of time and he created everything on his own. He put his brain there and finally made it so successful. So definitely anybody who wants to start, even though he has got a great business background, but finally he has to do everything on his own, then only he can learn every aspect of the business of the startup as well. I believe one more gentleman was holding mic for a long time and he was looking forward to add on something. Please, same question, you can add on.
Hello, can you hear me? Yeah. So I'm Arun with Anicut. We have an angel fund where we also support startups in the very early stage, pre-seed stage. So I think many of the folks here have already said some of the things typically people look at. So we are no exception. Ultimately, we look at the entrepreneur. We look at the team the entrepreneur is bringing together to make their startup successful, and are they really solving a burning problem? And that is, I think, very important, because many things are good ideas, but for it to be a business that is scalable, it has to be a burning problem for which somebody is willing to pay at some point. So I think that is the first fundamental thing. I also think this has changed in the last 10 years. See, 10 years ago, e-commerce was a burning problem. Today, starting an apparel e-commerce is not so much, there are already startups and other big companies solving the problem. So today we look at, newer areas, things that are emerging, what is the next 10 years going to be like. So we look for areas that are large, where problems are yet to be solved. I think, we are investing in the next 5 years or the next 10 years, right? So what was a good business idea 10 years ago may not be the same and as relevant today.
Absolutely correct. So total addressable market, that is what he said. Then team, the foundation, the fundamentals, all these things are very, very important when investors decide to raise their first check for a startup. One more thing we believe that is also playing a very important role these days, entry barrier. Is that something really important while we evaluate a startup? Because there are many startups who think that our product is going to be wonderful, it is going to capture the entire market, the market is very, very big and we can definitely take a big pie out of it. However, they do not think whether there is any entry barrier existing where more and more people can come with a similar kind of model and they can definitely capture the market in a similar manner. So anybody who would like to throw light on this particular point, that how much importance do you give to entry barriers for startups?
So, you see in our VC language, the jargon is called moats. So, we basically look at certain pillars or certain barriers like you rightly mentioned. These could be in terms of, say for example, an IP. This could be in terms of, the cost of entry for a customer or cost that a customer has to pay to change from you to going to another, competitor. It could be around how, if there are enough, large competitors already in the market that you're addressing, and will they be able to do what you're already doing in a shorter span of time? So those kind of, modes you have to build up in a business model right from scratch. But I was trying to grab the mic to go a step back and also mention a point. I think it's very important for the audience here to know this, that, as an entrepreneur, I know what you got into. I'm sure, we are all sure, you become an entrepreneur because you saw that opportunity, you saw you could make money in that. But a very critical question that you need to ask yourself is whether you want to take external capital or not. Okay, so when you enter that mode of raising external capital, then you need to ask, the next question is, why would somebody invest in you? So the number one point is that an external investor, especially investors like us here, want to enter or invest in a company only if they see a minimum of 10x or maybe 100x return or at least 100x potential in your business. We all know that, that it's a moonshot that would happen. but we need to see that scale, that opportunity should be big enough for it being an exciting enough opportunity for larger investors to come into you with due course. So when you're starting up, you need to probably, take that step, be able to understand, are you able to, now coming to this point, addressing enough, is the TAM or the market big enough that you're addressing? Are you the right people? Are you the best people who are doing this? Set of people doing it. Do you have that background? And then the last question comes to moats. If you are doing it, can somebody else do it at a faster pace than you, living in some other part of the country also? So these are the kind of questions you need to first ask yourself, before entering into it.
Great. I hope this must have served a number of questions that were there in the minds of the audience itself, and definitely this would help a lot in taking your further decisions. Now, moving on, please, sir, Dinesh.
Right, guys, I run a VC fund in agriculture sector, right? So everything what people say, technology, depth knowledge, more, doesn't work out. In agriculture, it's simple. You put something in soil and you get something. And it's all about the journey of growing food, right? But when we look from a startup perspective, and maybe an entrepreneur, I myself have been an entrepreneur, right? This is my third attempt, right? First two have been failed, right? So I've gone through the journey of being a failed entrepreneur, but you always come back. I think one thing when you look at running a startup or investors look, you have to look out, why would the investor invest in you, right? There could be a few ways of finding out why or figuring out what, and there is no clear answer. One of the few questions we ask is, are you able to get a good co-founder whom you can sell your idea and make him lose his career and work with you, right? Are you willing to take your money, the first put your 30-40% of net worth, how much money are you putting in? Is your family member putting money in your business? If you're not able to convince your family member, then investor not going to put money here. He's not even a family, he doesn't even care about you, right? Then he's going to look, are your friends willing to put some money? And if you can't convince your friends to put money in you, why the heck investor will put in money? We look at all those symptoms and say, is this guy really taking a potential hit into his lifestyle if this business goes down? If the answer is no, then investors don't care about it, right? We are all looking for moonshot, but we are looking for moonshot from people who are slightly hungry, who is not having everything fulfilled in his life. His career is slightly stunted if he is not able to get a success into this. So this is what really matters. Are you betting on the team, A category team, right? Business ideas, modes, TAM, boss, ये सब तो MBA college में you people learn everything, right? Everyone does this. We have got enough YouTube exposure to talk about it. Success stories are coming, but are you willing to put a lot of things at stake? And that is what's going to decide whether the investor is going to put money or not. And also, as rightly mentioned by Abhimanyu, you need to figure out whether you really want to invest as money. It's like if you want to do a business, it's like if you're driving a Formula 1 car, then you figure out a way what kind of investors or capital you need. Because a VC is like giving you a jet fuel kind of a power to you, right? He would want this business to grow no matter what happens, and give him 20x of his money. Whether in the process you die or not, he doesn't care about it. Because in our theory, out of 10 startups, 3 will do well, 7 will not do well. So we always take the risk of saying, okay, chalega, nahi chalega. So you have to figure whether you want the capital or not. You want to figure out where do you want, what kind of investors you want. Because some investors are there for 3-year fund life, 5-year fund life. Some are willing to put a 10-year fund life, 20-year fund life. You need to figure out what kind of investors, what tenure he or she has in. And you always have to create a business which is going to outlive you, right? You cannot make a business plan based on investors' need. Investors would come in if they like your business, but if you're going to make your plan based on investors' need, I think it's a 90% chance that business will not do well. So that's just how I wanted to add it out here.
You have to follow your passion, so that is what somebody I could take as. When we talk about the market scenario, the trends are changing day by day, year by year. We are seeing that new things are happening. A lot of startups are there, thousands of them are in the number, and many of them are in the process of becoming a unicorn also. However, at the same time, when we talk about VC funds from and private equity from US market, and people are now reading news, watching news of some kind of recession going on, some kind of slowdown coming in, and people are worried whether the investments would come in the same manner the way they earlier used to come or not. So, could you please, I have not heard anything from Jayasingh. So if you could add some value on this particular part, how is this slowdown in the US suicide is really going to impact the Indian market? Our Indian market is booming and will continue booming in the same manner. So how people have to prepare themselves to face this particular situation when they are hearing the news of a lot of layoffs and a lot of changes happening. So what kind of rationalization is happening and how we have to see the opportunities?
Sure, thank you. Before I start off the funding meeting, I just want to break one myth which is there in the startup world. People say that, you quit whatever you're doing and then start a startup. Are they really successful? Okay, that's a question to be answered, right? Why do you want to do a startup? You want to be successful. Just look at data points. The number of successful startups, the really successful ones, 28% of them are started by PhDs. So which only proves only one thing, that you have to have a very clear thought-through plan in terms of what you want to happen. So if you don't have that and jump into an idea, the chance of getting it right is actually goes down. So our sincere request to people, those who want to actually take up this particular space, is to have a very clear thought-through plan. Okay, look at people those who are in the diet. Each of us are actually running a startup. These are startups. We cannot even compete with the largest funds in the country. We also have a very clear thought-through plan. If you can actually get that right, it's 50% done. The next one, what you have to look at is how do you scale that? Okay, very efficient. If you're able to do that, you carve a little bit more. And the last one is you should learn to delegate as much as possible. Because founders, what we typically see is they are tight-fisted. They want to have everything for themselves. That's not going to work because scalability does not happen. So these are small things which we have learned out of our future. Coming to funding winter. Funding winter is there in US. Yes, the yield curves have already crossed, which necessarily means there is a recession which is up there. How it is going to be for India is a big question to be answered. But I will give you small data points which is happening within our portfolio. That might actually give you a sense on what is going to be there on the funding window. So again, the current portfolio which I run is close to about 17 companies, of which last quarter 10 companies have done all-time high sales. So I don't know what is that when we're talking about funding winter in India. It is not even actually gelling there. The second thing is this on the 17 companies there is close to about 1,200 crores of capital which is what. Across the 17 companies, 9 companies are raising capital. The total value of capital which is being raised by all these companies is upwards of 6,200 crores. Okay. This could happen anywhere between the next 2 quarters. I really don't know what is that we are talking about funding. But having said that, okay, these are good signs for India, what's happening in India and how India can actually thrive in spite of whatever is happening around us. But I'll also leave a word of caution that when there is a tsunami which hits it, you should not be standing against it. Okay. Just see how you can actually effectively manage that. Because dollar money is very important for the VC space. So if the dollar money is going to dry, which should typically happen because of the dollar free foreign trade, which will be unfavorable to us. But if you ask me, as an economy, we are actually expanding well. Maybe we will not have easy capital which is available. Capital might become a little harder. But having said that, if you ask whether India will go through a lot of struggle like what US would go through, we don't see that happening because today's data point doesn't show us anywhere there. We still do better than the rest of the world. Like how Germany has magically escaped the recession last quarter, India could magically escape this funding winter also. That's our reading currently. But we will stand corrected as we go closer to the market, because these are views at this point in time. Tomorrow things can change. Given that perspective, what I would say is, like, when conserve cash, be frugal, be more watchful for next like 12 to 18 months.
Please. I mean, I just wrote an article a couple of days back on the funding winter, so I mean, very fresh on that thoughts. I mean, on a lighter note, all startups start feeling like businesses when the winter comes, fundamentally, and that's how it is navigated, right? I mean, so I think this whole funding winter, I agree with him totally in that this is more of a global phenomenon. We will be affected, but we would not be really, having too much headwinds here. Just to run statistic, I think there are about $30 billion which have been raised to invest in Indian startups in the next 2-3 years, including ourselves. We will be investing in 25 startups in the next 2 years. Okay, so I mean, I just don't understand. And if you go to any mall, as on today, there is no funding winter anywhere. All the sales are on the top of the charts. There are more Mitra couriers coming to my complex than anywhere else I would have imagined. Right? So there is no funding winter, and I think I think the word of caution, I think as he mentioned, I think you have to look at it sectorally. And anyone coming from finance background, he mentioned about it. Everything has to come from a perspective of how finance works. And if you're going to try to say, finance works differently for my startup, it is not going to happen. Sectors like, I think, agriculture, healthcare, these are continuing going to boom. Right? There will be areas which are more dependent on the foreign economy, like services business, like Bangalore is a place. If there is a winter in the US, there will be an impact on that. There would be, but there will be no impact on other areas which are doing relatively well. Consumer demand, I mean, it's right now peak, and it's just going to expand about, say, 4 to 5 times in the next 10 years. So I mean, and the best startups are normally born in the funding winter, because they are born in a time when they need to be cost efficient. Right? So I think if there is a winter, I think we should be all very happy. At least I'm very happy if there is a winter, because I will get good valuations for the next 25 startups in the next 2 years. That's the positive side of it.
I'd like to quote one example here. Like you said, is enough liquidity there in the system? So I'm also a member of one of the leading angel networks in India. So last week only, they start this subscription at 7 p.m. right? And it was a raise of about 6 crores, right? And they started the subscription at 7 p.m. and I pushed my commitment at 7.00.38, right? But unfortunately, 2 days later, I got a list of investors who have invested. There were 35 investors who could invest in that startup, so I was not amongst them. So the 6 crore raise happened in 7.00.24. So that much money is available, and that much liquidity is available in the system. And also one point which becomes important here is people have understood and people have started treating this angel investing as a class of asset. So that has become really important. Like if you ask anyone who is investing into the financial market now, of that at least 10 to 15% he now wants to invest into startups or VCs or as an AIF. So there is a lot of money getting into this system now.
Fine. So I think it is positive news for all of you that there is no such kind of funding winter is there, and if it is there, it has to be seen in a positive manner itself.
Look, it's always euphoria, right? I mean, financial bubbles have happened like this, right? All smart people in this country, in the globe, does that. We screw up together, right? That's bubble. Some people were so smart of investing in cryptocurrency, it just went down. So everything goes up, right? So when you run a startup or when you talk of fundraising, it's always contextual, right? We always tell people you keep a 6 months of runway, you keep about. I mean, the stock market dries out tomorrow for whatever reason. Like if Putinji decides to do a nuclear blast, all things what we say is done then. I mean, that is how it is, right? So fund is
funding availability is always on a thin ice. You just have to be cautious how you are doing it. So when you run your business, you don't have to worry about saying, I need to raise capital for survival, because if that's your attitude, sooner or later you'll hit some kind of a rock and you'll get a problem. So you need to look. While today India seems to be in a good position, I mean, India doesn't always have a strong fund. We have been a jugaad country. We've been able to survive through all kind of problems, but with a lower growth rate. I mean, if you look at the talent in this country, we still are growing in a manner which is not the most optimal. So, when you raise capital, think about whether you genuinely need it. Keep money as a buffer, but always keep your EBITDA levels or burn levels so that if you want to squeeze profits, you should be able to squeeze profit in 3 months. That's how your business should be made around it. If your business is sustainable, funding winter will come and go, you don't care about it. If your business is going to need capital for survival, worse than you are looking at every next new investor how to raise capital. So that's how I would look at funding in that context.
Extending your thought, Jineshji, I would like to ask all the people, including Jinesh sir, that profitability, is that something very, very important these days, even at the level of the first check, that is the seed investment or the initial investment itself? Early age investing used to be generally on the basis of idea, as Rajeshji also said that it is an art. So obviously we have to take a leap of faith. But still, in the current scenario, when the correction is happening, when situations are becoming more matured and more mature decisions are taking place these days, so is it profitability? Is it really something important in the initial investment also, or is it again a leap of faith that can be taken without seeing the EBITDA?
See, I think by definition, your startups are the first stage of building a business. Eventually, you are heading to a place. You will be a SME, MSME, and a large business, etc. You will be a mature business one day, and I think that is where the metric of profitability becomes extremely important. Not to say that at this stage, when you're starting up, you have no idea about profitability, you do not pay attention to what is profits. I think that's the wrong approach completely. But expectation of a profit on day one, or maybe the first few months or quarters or a couple of years of starting up, depending on which sector you are in, I think is very honestly misplaced. It's like I'm sending my kid to a school and I'm saying, "Mere tankha kyun nahi leke aaya wapas?" I mean, it's unrealistic, right? So I think as investors in early stage businesses, we understand that, but I think what we look for, whether it is funding winter or funding summer, we are all looking for a path to profitability. That, okay, this is the first check, take this money and do X, Y, Z. And once you're done with X, Y, Z, you're on a path which will lead you somewhere to profitability. So not to say that these times profitability has become a core thing we are looking at. I think we are looking at it all the time. But we are not, at our stage, we are not investing in a company expecting profits to come in now. That is for later stage investors.
Perfect. So anybody else who would like to add on to this particular same question, like how much profitability is important while you are raising the first check?
Hello. Yeah, I think I would agree with what Rajesh said. I think profitability is more important probably later. I think in the early stage it's more the team, the opportunity, but path to profitability certainly. And that's also actually the other point that I wanted to make was that it's reflective of the funding crunch. The funding crunch today is more in late stage companies. It is all the unicorns, the decacorns that are sort of seeing a funding crunch, their valuations kind of being rationalized. So funding crunch is not as much there in the early stage. Also, we basically when we fund companies, there's a certain amount of runway that we plan for. So as long as there's path to profitability and the unit economics are good, because what we look for is high gross margin businesses. So if you have 80% gross margin, then you have for example, then you have enough room in the cost structure to eventually become profitable, because we know you'll spend a lot on marketing, you'll spend a lot if you're e-commerce, you will spend on logistics, all of these other costs. But if you have high gross margin fundamentally, then you have enough room in the cost structure. So even though they may not be EBITDA positive, you can be EBITDA negative, but if you have high gross margin, that's suggestive of future profitability.
Great. Moving on, sir, please.
I will just add here, not only path to profitability, sometimes we see founders who are married to their product or their idea. And the thought about monetization comes only later on. Or they would say that we will figure along the way. But that is something that has to be evaluated when we are entering a company, not along the way. Because typically in the Indian ecosystem, the value of debt is beyond Series A. Beyond Series A, getting early stage capital, which is seed to Series A, is easier relatively. Series B is where the men are separated from the bodies, and then you move on and you progress.
So when we talk about investing strategy, so one more point I'd like to add here is why we invest at a super early stage or an early stage company or at a seed stage. Technically, they're just coming up with an idea, and so as to make it happen commercially viable, there need to be a lot of calibrations which need to be done. So we have seen like companies started with a particular idea and then they calibrated it 4 times and then finally they became profitable. So what is more important here is to assess a good team and understand like how much flexible they are and how much they live that particular passion. So that calibration happens over time, and then as all our sports speakers said, profitability can always be is always important, but that does not come at an earlier stage.
Sure, so that comes later. First of all, the conviction in the idea has to be there. Just come, the early stage, I think there was a point in that, profitability, right? So, and there is another point in terms of how you raise the first check. So, I think there are multiple opinions, and one of the opinions that, we have hypothesized over the last longer period is your first check should not come from your family and friends. The reason is simple, they will always protect you, they'll not push you. And even if you're wrong, they'll be okay with it. So I think I'll give you an example. We are talking to a company which is like about 10 million and they're doing like early stage funding now. And the founder is actually interviewing the VCs to find who is the right VC for us. Fair. So now to take that concept back to seed funding in terms of writing the first check, right? So I have an idea. So if I talk to my family, someone would say, TK up 50,000 में से ले लो, which doesn't work, and I think everyone needs to read startups of how to dilute equity, otherwise they face a lot of problems the next day. Now, the most important thing is someone needs to buy that idea. I think the first is you look at it from an investor's perspective, saying, would I invest in my own idea? Is it a profitable business? Do you see making money out of it? Right? And then you need to find people based on the idea who are the right people who should be investing in that startup. And will they back you in specific segments of that startup to grow you, push you, right? I think that's the most important thing what I feel in the early stage. You need to find the right team from the operational execution perspective, but also from an investor's perspective. I think you need to find the right investors. I'll give an example. We have a SaaS-based water purifier, right? And typically, I think for them, why would they want to raise than anyone else except their own manufacturers who sell their compounds? Right? Because it's a mutually beneficial engagement. Those guys will push you saying that I am producing this much and selling at such a discount to HUL. I am getting more margin from you. I want you to go to 5x. I'll give you a discounting from a finance perspective. You go and sell. So I think now you are creating a model which is win-win for both the investor and yourself. And there is a clear business sense to that funding. So I'm actually totally against taking funding. In fact, as a fund, it's very clear we don't talk to any of our friends and relatives to invest in our fund. That's the level, because when we say that to entrepreneurs, it's something which we need to follow as well. Right?
However, there are two kinds of startup owners, startup founders are there. Some who are seasoned, who have already worked in companies, who have already founded certain things earlier. And there are few who are freshers, absolutely. When you talk about freshers, obviously they are not that much prepared and they look for first check or first funds from their friends and family itself. So do you want to suggest that even the first check for the freshers, those who are new in the business, should also look for VCs to evaluate them and then they should get the fund?
My personal opinion is no one should start with a business straightforward unless it's like a cracking idea, which I think Ritesh did it. I think he's like a different league of an idea, and the conviction he had, probably not many entrepreneurs could have it, how much he went through. right? But I personally feel if you think your idea is related to healthcare, I think go and work in a hospital or a healthcare company for 3 years, figure out what is the ecosystem, and I think most important, how the financing works in that area. I think every idea has to have 2-3 things. One is technology, one is the product, and third is the financing. Unless you don't figure out all 3 of them, and I think the one more thing which people need to do very efficiently is every business model exists somewhere or the other. And if you're not researching enough for your business idea, because if you're doing something in a different area, there may be in other areas similar companies who are doing exactly the same model, and how does that work for them, and how would you do it differently? I think that's a very important thing, and I think that's the reason I said that they should spend a couple of years working in that industry, is because once, it is like a dream world, right? I mean, from outside you say this is a great idea, I feel it's believable, but when the entrepreneurs, when the VCs will ask you that question, they will not ask you based on what you think. They'll ask on what is the market feedback. And for you to get that, you need to go through at least 10-20 companies, and I think that's where people from MBA have a great advantage, because they go through a lot of case studies in terms of how companies have evolved, which typically is not done by a lot of engineering side of things. So I think everything is a consensus, is a great team, but a well-researched team in terms of knowing what they're getting into.
Great input. So on behalf of the audience sitting over here, I would like to have certain questions from them. Yes, because they must be expecting certain.
Can I ask a quick question while Deepesh is still online? And probably other ones can also add to that. Why do you say it's kind of a unique point that people should rather raise from venture capitalists or some kind of external business rather than from the family? My key question is that there are two perspectives. One is kind of a local ecosystem of the investors as against to some other kind of larger ones which are outside the local ecosystems. So do you want to suggest that even while going to the market, one should look at the local ecosystem first and raise a check there and raise the credibility around, or be more recognized before coming over and talking to the larger ones? Is that the one?
The way I've seen it, even if it's done from a local ecosystem, they actually give them an exit in 2-3 years, double the money and get out. The reason is I think there is an emotional aspect to raising from a local ecosystem, and I think for an entrepreneur it's very important to just focus on business and not the emotional aspect of it. So I think it's right that you could raise it from a local ecosystem or probably a family, but I think you should always look at exiting the person as soon as that venture is in a certain shape, because I think you're right probably, and I think that's one of the reasons there is an emergence of a certain VC ecosystem. I think there are a few, Entrepreneur First, HVC. I think these people are doing a wonderful job for us. The reason is we are late stage, right? But if someone has to understand, I think it's also important that we do it here. The reason is, as I said, startup is a model, right? And the entrepreneurs, when they come in, they have imaginary thoughts in terms of it. And these ecosystems, they have like a 3-month dedicated training in terms of putting together the entire idea of how to raise, how to pitch, what are the key leverages for your business system, how do you find your co-founders, and most importantly, how to scale the startup from a startup ecosystem perspective. See, businesses can be scaled in multiple ways, but when you come to a certain ecosystem like a VC ecosystem, there is an expectation of a certain process to be followed in terms of how you do it. So a same company can raise the valuation at 1 million, and the same company, same idea, same entrepreneur can raise that whole thing at a 10 million valuation. It is just about the conviction and knowing what you are getting into. Sir, please.
There are two questions which have come to my mind. One is the very serious thing we see, money burned. Before even we come up with a venture to start real commercial operations, the kind of propagation, they need to put a lot of advertisement, promotion, and then we see heavy discounting. I do not know at what stage they could really have to break even their operation, and they would expect, with those kind of projections, the investors would actually be ready to really fund them. And the second question is again similar in nature, is that I do not see a real valuation basis for a startup. why everyone says that I've been valued at so much and their aspirations are so high. They start with 10x is like just getting an idea, and maybe 2 years then they are 100x or 1000x. So this is something which I do not see a real accredited agency or an valuation system in place which says that, okay, like my company as a commercial company has so many agencies, bankers, they can evaluate, do my net worth and what actually it is, but some projections and then they start lying. So that is, I think, one of the major reasons, and then if they are able to secure sometimes easy money or sell their ideas effectively, they may not be put to right productive use. So that is also a fear. So these two questions I think I would like to have, say, some kind of guidance, from the experts. Thank you.
So I think what you said is an important point in terms of saying, the burn, right? And I think every VC firm looks at it very differently, and if you ask me a question on burn, I think everyone would look very differently. I can tell you how we look at it, right? See, there are two kinds of burn, right? I mean, I'll give you an example. We asked an entrepreneur who was raising something, and he asked, okay, you're raising 500K, we'll give you 5 million. How much will your sales go up by? He thought for a minute and said, it will go up by 5 million. I was like, really? You're putting 5 million in the company, and then you're saying there will be a lot of burn. Right? I think what burn you're talking about exactly is that's the problem area in terms of the way entrepreneurs are looking at. For us, I think the aspect of profitability is in a way linked to burn. And we look at primarily areas where the burn is towards the growth and not necessarily towards the existing customers. Right? So what it means is if I remove 50% of the sales team and probably remove 25% of the team, the company will be totally profitable. The reason is that the burn which is happening right now is towards their future business and not necessarily towards their current business. And I think the reason that is important in the VC ecosystem is because there is no entry barrier in technology. I'll give you an example. Byju's sold all the parents saying your kids don't know anything and they have reached a certain valuation. And then Alak Pandey comes and then does it for like 25% the cost, the same thing. And then the valuations crash and everyone crashes, right? So I think the entry barrier is a very important aspect of why the burn happens, because everyone wants to get to the market and be on the product. Like, if you are developing app, you want to make sure that you are on the 100 million mobiles right away. And then it's very difficult to replace you. So every model is unique, and I think that's where the growth investing comes in. Growth investors typically look at that aspect, that the burn is going towards your future growth. Right? I think the second question is on the valuation front, and I think in valuation, I think that we studied this, and I think there's only one way it is done. It's called DCF model. I think discounting cash flow model. And we studied 10 different companies which are doing DCF, and what they have done is the weightage of each component in DCF. I think he's smiling, so he probably understands. So if suppose there are 10 components in a DCF, which are not, I think it's around 5 models. The original model is quite simple. What people do is they add their own variability to it, and then they say, this is the most important aspect. So I suppose the same company, I would say, this has a global potential, so I will give it a 2x. The other person thinks, I am sitting out of US, I can take this company 20x, so I will give a 20x. Right? So I think that is how VCs evaluate differently from a DCF model, because I think they weigh different aspects of the, in terms of the business very differently, and there is no standardization. And also I think there's one more challenge in VC industries. I think if you dilute too much, then you're in trouble later stages. So I think that also kind of creates that problem in mid-stage, that you have to invest at a little higher valuation than what it is. The reason is because you don't want them to dilute too much. How you adjust the DCF, I mean, it's a fair understanding. I mean, it's coming from a person from business. I think that's the only thing I can tell really from how we look at models, right, primarily.
Allow me to add two aspects to this. First, your second question about valuations and all that. Let me go back to where I started from by saying that this is more art than science. And I think valuation is the area which really proves that point.
beauty lies in the eyes of the beholder. ये यहाँ पे एक आर्ट का पीस लगा दो आप क्या वैल्यू दोगे, मैं क्या वैल्यू दूंगा, कोई क्या वैल्यू देगा, कोई दो जन आके यहाँ बैठेंगे क्योंकि वो खड़े खड़े थक गए तो बैठ के देख रहे हैं, आराम मिला इसलिए बैठ गए. So beauty lies in the eyes of the beholder. Valuation in the early stages, I can assure you, from my experience at least, we try to do DCF and relative valuation, similar businesses, other geographies, discounting, all those technical things we can use. Ultimately, it boils down to that feel that we have for that business, that team, that plan. Easy sounding, convincing. Do we think that the team has that ability to deliver? So I think valuation is driven more by those factors rather than this. And I think your point on burn is very. It reminds me of this English language. They say no, funny language. It's a very funny language. And actually, it is not burn. Nobody is burning money. I assure you, we don't let anybody burn money. It's an insult to the currency. We let them invest. And I think we have to choose our words properly. तो ये जो इंग्लिश जो खराब हुई है ना, ये अमेरिकन्स ने की है. जो ब्रिटिश इंग्लिश थी वो बहुत बढ़िया थी. After the Second World War, you see most business terminology emanates from war. Capture market share, kill competition. 10,000 examples, just, especially people who are doing, late stage BAF or early MBAs or MBA courses, pay attention to the language, it's all war.
Contemporaries have become competitors.
Sab war hi hai. So we have to move away and choose our words wisely. So I don't think it's a concern. I think one of our co-panelists made a very excellent point in the beginning about unit economics. So we are all focused on unit economics. We are all looking towards that path to profitability. बट वो अभी जो पैसा है वो बर्न नहीं हो रहा है. अभी बच्चे को हम स्कूल भेज रहे हैं, फीस उसको दे रहे हैं, वो बर्न नहीं है. इट्स एन इन्वेस्टमेंट इन माय चाइल्ड, राइट? इट्स एन इन्वेस्टमेंट फॉर द फ्यूचर.
Groceries at a heavy discount. What do you call it? And there's a discount.
It's a classic example, right? The government takes care of the poor people. The rich people take care of themselves. Someone has to help the middle class, right? I mean, just on the question of saying burns, I think what it really means that quite a few models which work. Let's say, from an entrepreneur perspective, you understand that you should get the unit economics right. From an investor's perspective, you also appreciate that he or she has a fund to manage. He can deploy in 15, 20, 30 companies at best, and he should deploy capital. So when you put, at least when people who stage get the investment, right, as for managing the risk, you would put a first check and see whether if the company does what it's supposed to do, it will be possible for him or her to invest the second check and the third check, because there is a fund to manage. So you keep investing for future growth. If you are able to achieve that, you put a more capital. And because you are able to put more capital, you can bring more external capital also, because that's how the ecosystem works. So it's not that burn is like we're asking people to lose money from day one. It's always about going through a process. It's like if I'm an early stage investor, if I'm putting a $2 million check, someone is going to put a first check of $5-10 million. Unless I see the potential of him investing this more capital, how do I get my exits? How do I get the new bigger investor to do that? So there is a science it does. And sir, that really works if you are a startup. When you say a company like yours, a Prestige Group, it's no longer a startup. It's a business. You are looking at metrics about can I get my ROI for the shareholders return. That's the focus. A startup is trying to disrupt, has nothing much to compare around it. So it's looking about can I raise more capital to make a larger disruption. So that's how we look at it. There is a clear distinction between a startup and a business and an SME. So what we are talking about startup, when we're talking about burn, I mean, it's about those things. And valuation, sir, is always about negotiating power. If you have 5 term sheets with you, valuation goes up. If you have there is only 1 term sheet, you take what you get. That's how it is.
So ultimately,
example of how in the early times. In early times,
I think Coke versus Thumbs Up, I think a long back story right now. Coke owns Thumbs Up, and they started with that model that they broke the price barrier for Thumbs Up for a very long time because they had US dollars.
So I think in certain businesses, if there is an entry barrier, the only way you can break it probably is by discounting. And probably, I think in the next 3-4 years, 5 years, I think every business is going to go through that disruption just because there is enough capital in the world. So it can come to real estate, it can come to healthcare, it can come to any industries, and I think it will happen. Healthcare is, I think, now getting started. I think legal might be the next. I mean, I don't know if there are lawyers here. Anyone from law? Yeah, I think probably there are a few sectors which are probably just getting started. I think healthcare and law is, I think, the other one. They will be disrupted very strongly because I think everything which is to be disrupted has to have inefficiencies. And I think these two sectors have enormous amounts of inefficiencies right now. I think these two will be definitely disrupted in the next 3-4 years. We will see a lot of stuff.
I would like to invite some of the participants to ask questions from here.
So I think I'm from D-Hub. There are a lot of from the audience. Incubators, owners, incubator runners, managers sitting in the audience. On behalf of them, right, how do you feel from your perspective? Can incubators be enablers for you to reach out to the right startups, for you to be able to get engage with startups through incubators? What would your preferred model of engagement be with incubators to reach out and engage with startups for funding purposes, of course?
Look, I am from an agri fund, right? So for us is to understand the startup way, how the journey is evolved, right? So we would request incubators to bring us early in the discussions when you are evaluating the company. So this is a company which is getting in your cohort, right? How the progress has happened, and let the VCs start engaging with them on a periodic basis, right? Because for a VC investment, it's all about relationships, right? I mean, unless we meet our entrepreneurs 8-10 times, spend few dinners and few lunches together, get a comfort around the person, you're not going to make an investment. So what generally incubators does, they'll do a cohort for startup day, come, give me 5 minutes and I'll decide what will happen, right? For 5 minutes, we don't even decide about whether we should take our investors or not, yeah? I mean, we need more time to understand a startup. And the only way is by talking to them, right? So, and generally incubators are very cozy, or they just want to keep the startups in a very cozy, comfortable situation. We don't want them to engage with an outside world because VCs are pathetic people, right? They will slap the entrepreneur on day one. That's the job we will fully train. So you need to get them, be open and get smacked from VCs. So early engagement is always useful.
So I'm part of Venture Catalyst, and we call ourselves an integrated incubator. And that's also because we can't do the job that probably incubators at grassroots are doing. And that's why we tie up and work with a lot of them. And I think it's a major role that you're playing, and like Dinesh rightly said, I think there needs to be a lot of involvement of investors in terms of what are they looking for, because that's the right stage to be, getting involved in and checking all the boxes which we already mentioned. That should happen from day one. So they are already on that right path. And coming back to our point, I think we call ourselves an incubator because we want to help the companies on that right track also. To be able to be funded by larger VCs, to be able to get that market access through our network that we've created. So those kind of things we also work in. But at the grassroots stage, it is you who are cozy with the founders and can work with them on a day-to-day basis and give them the right opportunities. So I think this is one of them. So this should be more often. I mean, it could be as simple as virtual interaction with various VCs. I'm sure we all do this for a living, and nobody would mind doing a 1-hour session, every month also with an incubator.
We are happy to engage with incubators by doing things like an open house, where we come spend a day with the companies on the incubator campus. Have startups meet us, talk to us in an informal setting, sometimes formal setting. Sometimes formal setting are a little intimidating. So we call these things open houses. That's how we like to engage with them. We come spend a day, meet a handful of them, engage, spend some quality time, understand what they're doing.
Okay, I have some sorry, please, you just have. Okay.
Our experience with incubators is largely from this wherever we are based on, right? IIT Madras is one exceptionally very well. I mean, IIT Madras incubator is one of the best. The kind of companies they have actually incubated, especially there is one professor who is driving this and then he's showing the path to the world. If at all somebody wants to replicate something or else learn from it, that's the best place. He also put money in 6 companies in their incubation. There are hardly 22 companies. 6 from one fund is like actually very high. So if anybody wants to derive information or inspiration, just visit IIT Madras and spend it. You will get enough and more insight. Rather than speaking from us, because we are going to be a derivative form of what they actually do, you please visit. That would be my speech.
So time is running out and we can take last couple of questions quickly, maybe precise questions and
Just one point answers. It is not just startups are bought out of incubators, even VC firms are bought out of incubators. In fact, my first experience of startups was with T-Hub. Ajay used to be the founding member of T-Hub, and Srini and MSR have been great backers for us. So, I mean, see, the ecosystem, I think one more important thing is the accelerators or, these things, they can bring in a lot of corporate people with the problems to solve. I think that's very significant because every problem eventually leads to kind of a solution, and whether that solution is scalable would be very important. And I think that's why I think on a week probably they have like 5 or 6 corporates visiting them, and they are doing events with specific startups to say whether they can work with that institution in terms of Siemens, Nokia, anyone. They would be doing things like that. So I think that is a very important thing, and I think every city which plans to do startups, I think should have that facility to attract corporates, because not just for the funding but to get the problems solved.
All right. Insightful. So yes, you can come with the last question.
I'm Manish Panja, and I run a fintech platform which is at the cusp of healthcare and fintech and lending. The one question which I have across the dice is, what is your investment thesis, in which area you are specifically invested, and what is the ticket size? I can understand we can actually go back and...
I'll try to rephrase the question. Maybe he's looking forward for a simple answer that in the current trend, what kind of industries, what kind of specific things are now attracting the investors? Like earlier, sometime it was EdTech, then EV came into picture. So now, what are the preferences? What are the preferences that are to choose from these specific sectors for funding? So I think that is what he is asking about. Right.
Maybe I can start and others can add. Now, speaking for Bloom, we are investing out of 4th fund, right? One cardinal, like cornerstone principle, is no investor would be married to a certain vintage or a sector unless they are a sector-focused fund, which is very difficult, right? So, for example, a generalist fund like us, and at the next level, Sequoia or Access, they would always be looking at differentiated themes, not dependent on a sector. So it is not that, okay, this is 2022, so we will be only making whatever space tech investments, and it is 2023, we will only be doing fintech. It's not that, right? Each investment house or each fund would have some core strengths, some preferences, but again, they will be difficult. So there will be vertical focus fund and there will be horizontal focus fund. Entry checks would vary depending on where each of us are coming in. So for example, Bloom invests $1 to $2 million as a first check. The target is still 15%.
Right. So on the equity side at Anicut, we have an angel fund where we do up to 7 crores per transaction, where we will invest about 15 to 20% of every round, and then we will bring a network of other angel investors to participate in that round. So we have skin in the game. We look at all sectors. We are sector agnostic. So no specific focus. We are including some of the new emerging sectors like deep tech, climate tech, AI. We are investing in all sectors. I mean, I'm not sure if the question is who's investing in fintech. No, that was not there. He said that his background is from fintech, but he is asking what kind of trends are going on right now.
I think we covered it well. I mean, that's exactly the thinking from even our perspective. Anyone who would?
Yeah, I think that's it.
So yeah, pretty similar. We're also an angel fund. Sweet spot is around 250K to about $1 million, and very sector agnostic. As far as trends go, I mean it's fairly on the same lines. It's not like EV is dead, right? And agri-tech and ed-tech opportunities. Fintech is always huge. We also have another key member from our team, Dipanshu. He's part of the Beams FinTech Fund, so you should probably speak to him also. It's a sector-focused $100 million fund.
Sure, I think we can close the session for
just one point here. I think you should always look at what is the problem the world is facing. And right now, I think it is the salaries. The higher compensation in tech is a big problem, and that will lead to a lot of tech innovation around products. So I mean, everything leads. It has like a 3-year lag cycle normally. So I think right now US salaries have gone like crazy in terms of, and this is not sustainable. So it will have that next cycle where you would see a lot more products instead of services.
So probably this is the panel discussion, which is okay? Yeah, no, nothing. I just want to close it. Yeah, Dinesh sir is okay. Okay, so probably we are the only ones who are between you and the lunch. So there
is a small bit of
please.
Another few minutes. So I think over a period of last 70 odd minutes, we had a beautiful description of the bride, of what the bride should be all about. But I'm sure the bride also knows now what is the bride supposed to be like. And I'm pretty happy that all the conversation went on with a lot of information, the knowledge sharing, and the complete understanding about, very capsulated, but a very intense understanding of what is expected out of startups when they start to approach, and some very fine points mentioned across. But I have kind of a very strange question, and it's not very essential to answer that either. But what do you folks look for? Say, intelligence versus energy. Hard work versus being hungry, or intelligence versus patience, or core competence versus jugaad. There's always a contrasting side. So, what is exactly the thing? Not essential to answer though, but this is my confusion as well. Folks, even after having been into the industry for long, I'm not sure whether energy more important, intelligence more important. What are the factors?
I guess you answered it earlier itself. That is why it is an art to decide. It can go either way.
Yeah. Let the confusion remain. Let the people find out their own ways. And I'm fairly pretty sure that either ways, people really cannot so substantially change. They have to remain with originality, whichever they are, and you as folks having very sharp eyes, very experienced mindsets, you are able to look through the cracks. But one thing definitely as a kind of parting note, I really try and see whether that's pitch round is whether that's an art of presentation, or it is purely trying to tell whether this project is good or not. But my own vision, my own version, it is not about so much about the art of presentation. It is the ability of folks, people like you, who have been able to see through and identify the opportunity there, not just from the present standpoint, but how it can be further amplified and enhanced in terms of whether several cross-pollination would happen, or what logical standpoint it can be taken to. With those notes, thank you so much. Please remain seated. Can I have you, Raviji, here, please, for the sessions? Yeah, so, no, we'll just first the mementos.
Yes, sir. Mementos.
Can I request you to participate? Last
Now, sir, please start by felicitating Mr. Jinesh Shah, Managing Partner on Universe.
And Rajesh Sehgal, please.
Mr. Rajesh Sehgal, Managing Partner, Equanimity Investments.
Thank you both for coming up.
Coming to Mr. Abhimanyu Bish, CEO Venture Catalyst. Mr. Dipesh Agrawal, Partner, Silver Needle Ventures. Mr. Jayasleen A, Partner, Anikit Capital. Mr. Arun, Executive Director, Anikit Capital. Mr. Alok Mehta, CFO and Lead Investor Relations, Bloom Ventures. CA Anand Sakletra, Partner, Ivy League Ventures. Our spectacular moderator, Mr. Abhishek Sanghi, sir, Partner, Ecosystem Ventures. Yeah, Mr. Shailesh Jain, sir. Sir, I would also like to felicitate Mr. Saurabh Sharma, VP and Finance Controller, IAN Fund, and Mr. Dipanshu Siddhanti, VP Investments, Beams, FinTech Fund, if they are here with us.
From conviction that investors expect to investments trends, I believe every startup founder have had key takeaways from this event. We could not think of a more better platform to felicitate startups that have been able to secure the seed funding from Startup India Seed Fund Scheme from this incubator. I would like to invite on stage ICAN Solutions Private Limited, a startup incubated with AIC-PRESTIGE, followed by List App, then Fort1 Energy, followed by Soaring Aerotech and Vintage Food. So these are our dynamic and young startup founders incubated at this very incubation center, AIC-PRESTIGE Inspire Foundation. Fort1 Energy next. Soaring Aerotech. And Vintage Food Tech Private Limited. Sir, we would like to also take this opportunity to launch the Jumpstart program that AIC-PRESTIGE has launched. This program is specifically designed for budding entrepreneurs and innovators. Its objective is to develop innovative thinking and entrepreneurial skills. This initiative, Jumpstart, would help understand the requirements and challenges concerned with creativity and innovation. Entrepreneurial skills, transformation of ideas to startups, and intellectual property rights is valuable. The learning from each workshop will be put through a practical implementation via varied activities. We're honored that you're here at the launch of this particular event. We also launched the Innovation Club at AIC-PRESTIGE, a unique platform for startups, students, and any interested individual to engage in innovative and creative activities, while providing opportunities for hands-on training. It would raise awareness, educate, foster, and inspire an innovation culture in the members, allowing them to generate new ideas. It will also help them become more innovative in their viewpoint. The club is aimed to help the next generation shift their mindset by presenting them with inspiring legacies of past national and international innovators.
Launch Just a round of applause.
Panelists, I truly thank you for your participation and stimulating just the right verbatim in all of our founders' minds. We sincerely thank you for being a part of this panel discussion and taking your time. Thank you so much.
We'll have a lunch break now, and post-lunch break we'll reassemble at various standpoints at 2 o'clock. Reassemble at 2 o'clock.
Thank you for coming.
चले भाई
हाँ कर दिए ठीक ठीक ठीक. Good afternoon, ladies and gentlemen. We are starting the session now. I request everyone to assemble here. Venue and announce that we are starting now. People on lunch, please reassemble.